Section 4. This part is huge. Knowing all these cool strategies is great, but avoiding the traps is just as crucial. So let's talk about the common mistakes that can totally wreck your progress.
There are 4 big ones. First, and this is the biggest, is stopping your contributions when the market tanks. That's literally the best time to be buying. Second, letting your emotions, fear or greed, drive your decisions. That's a recipe for disaster. Third, not paying attention to transaction fees. They can eat up your returns. And finally, the set it and completely forget it trap. You have to check in on your plan at least once a year to make sure it still makes sense.
And now, let's bring it all home. Section 5, Your Path to Mastery. We've talked strategy. We've talked about what not to do. So what are the big principles that lead to long-term success?
You know, when you boil it all down, it really comes back to this simple but super powerful idea. Discipline to stick with your plan, consistency to keep showing up, and strategy to make sure you're doing it smartly. You put those 3 things together, and that is the formula for long-term wealth.
And if you remember only one thing from our time today, let it be this. Mastering DCA has nothing to do with being a genius who can time the market. Nobody can do that consistently. It's all about committing to spending time in the market and letting your steady, strategic actions do the heavy lifting for you over the long haul.
So, I'll leave you with a question to think about. After hearing all this, what's your DCA strategy going to be? Are you using these tools to really make your money work as hard as it possibly can for you?